Yo, what's going on, guys? This is your boy Trillionaire Mac, and welcome back to another video. So in this video, we're going to be breaking down a USDCAD trade, right, that was called this weekend to anyone who signed up for private sessions. You guys already had the parameters for this trade right here. So this past weekend, I opened up private sessions to all of my YouTube fam and everyone who follows me publicly on my social media accounts. All right, within that one-on-one session, I told you guys whoever signed up would not only receive my day trading strategy, okay, but I told you guys I would also give you guys a free trade to take advantage of for when the market opens. Now we're going to go over the before and after of this trade. We're going to break down the entry, okay? For those students who did join, I actually gave you guys my new entry model. Yes, you guys heard it properly. I have a new entry model that I haven't seen anywhere else. I've back tested it, and I'm going to share it with all of my mentorship students this coming week within our Wednesday night advanced webinar. All right, so if you're a student of mine, be sure to tune in on Wednesday for the advanced webinar so you can understand and get your first insight look on the new entry model. It's going to make our trading very, very simple and straightforward as it relates to the entries. All right, so with that being said, sit back, relax. If you aren't already subscribed to the YouTube family, feel free to hit that subscribe button. I would love to have you a part of the family. I would love to have you eventually a part of the team. So with that being said, let's get into the video. First, we have a quick commercial break regarding the Telegram community, and then let's get right into it. I'm going to interrupt the video for a split second, and I wanted to tell you guys about this trade right here. This was a DXY trade that was called out within the Telegram community earlier this week, and as you guys can see, this trade is about to produce a 16.58%. Okay, let's change this. This is a DXY trade that we took within the Telegram community earlier this week, and as you guys can see, this trade is about to produce a 16.78%. We risked around 8.5 pips for about 142.6 pips on the DXY index, and as you guys can see, we are about to hit target pretty soon here, right? Now, this only took a couple of days for us to produce 16%. There are multiple individuals within the Telegram community that are going to be passing their funded accounts. There are multiple students that are going to be passing their funded accounts, all from one trade, right? Now, if you're someone who wants to produce about 16% in 2 days and 16 hours, right, and be able to withdraw $16,000 from your $100,000 funded FTMO account, what I want you to do is join the mentorship program right now. Click the link in the description, join the mentorship program, and if you cannot afford the mentorship program, no worries. Take advantage of my setups within the Telegram community and take advantage of the profits. All right, use the profits, reinvest it into yourself, and let's get the ball rolling. All right, now let's get back to the video. All right, so welcome back to the breakdown. So as you guys can see, okay, this is the trade right here. Now, before we get into this trade, of course, I'm going to have to show you guys the before. So this was an image taken this past weekend when the market was closed. And essentially, everyone who signed up for private one-on-one sessions this past weekend, you guys were able to receive this trade right here. Okay, now we're going to break it down. So as you guys can see, I have the arrows pushing up because I wanted this high to be taken out. Then I have the arrows retracing back down to 1.24751, which was my entry model that was set. Okay, I had my stop loss down here around 1.24652. Okay, and a lot of you guys may be saying, Mac, how did you know to take an entry right here when we don't yet see if supply or demand is going to come into the market to take out this high? How did you know the market was going to come right back down to 1.74751 and then react and push to the upside? So I know a lot of you guys may be asking that. All right, and before we get into it, as you guys can see, entry was right here. What does that say? 24751, and then of course stop loss 1.24646. 1.24652. So the stop loss is slightly different, okay, based on FXCM server. Okay, so it's a little different with the stop loss, but as always, you guys know I don't like to risk anything less than whole numbers or half numbers, right? So if we move this just a little bit to where the stop loss would have been, 24652, right? It's 9.9 pips, right? So instead, I just increased that to about 10 pips, okay? But just to give it a little bit of buffer room, since we're taking this entry on the M15, right? I just increased it to about 10.5 pips. So if we were going with the exact, parameters that we could have had, okay, this was a 6.55% return, but we're going to go based on the parameters that I actually set for this trade instead of what was actually, here, let's do this. There we go. So instead of having a 6.55% return, okay, my return was a 6.24 simply because I increased that stop loss by half a pip. All right. So let's start to break this down from the higher time frame down to the lower time frame, and I'll see you guys at the higher time frame. All right. So as it relates to USDCAD, right, we have an apex demand right here. Okay, we see a lot of accumulation that came into the market. Demand came into the market here that pushed price to the upside, and we can see that we have nothing that returns back to this demand that came into the market that caused this push to the upside, tapping into the supply, which ended up giving us a supply failure and also a reaction point, which we were able to take advantage of when price traded into this area here, and we took buy positions from this area right here for around 9.09%, right? So a lot going on within this area overall that created these trades here, all right? So once price tapped into this H4 zone here, okay, we just went to the proper correlating time frame and we started to look for our entry schematic. So let's go down to the M15 and let's look to see what we can find. So on the M15, we can see that our entry schematic, okay, usually we like to see a sweep of liquidity, change of momentum, and then we take an entry based on what caused that change of momentum, as you guys know from my previous breakdowns and things like that. But I am actually taking my entries differently now, okay, based on the higher time frame, and I may actually adopt this to the lower time frame as well. So M15 technically is the micro time frame in comparison to the H4, but as you guys know, most of my entries also take place on the M1 time frame, on the M2 time frame, on the M5 time frame, right? So on the M15, my entries will now consist of 2 steps instead of 3, right? Literally, it consists of setting an alert. Once that alert goes off, then you set your order based on certain parameters. Now, I'm not going to teach that publicly. I'm only going to teach that to individuals who sign up for the private sessions this coming weekend, okay, this coming Saturday, and it's going to be for individuals a part of the mentorship program. I'm not going to be teaching this within the Telegram community, and I'm also not going to teach this on YouTube. All right, now I may teach my previous entry method on YouTube. Okay, I may do that, but this new method is absolutely crazy, and it's going to get us into the trades without us having to think much. We're going to have little drawdown, and most importantly, we're not going to have to watch our charts, okay, which is most important to me. Being able to just get into a trade, be able to use my time for something else, and still come back to my phone and have some type of return on investment. That's what's important. So as we can see, we have a sweep of liquidity to the downside here. Okay, breaking structure to the downside. We tap into our higher time frame zone here, right, based on the H4 time frame. Right, we create this low here. Okay, before the low, we created this lower high, and then price pops to the upside and creates this wick here. Now, so as you guys can see, once we actually break this high here, that is when I told everyone who joined the private sessions this past Saturday, okay, I told you guys to look for price to retrace to this area right here, okay, but I told you guys wait for price to actually break this high first and then look for the retracement. So once price broke that high, which was here, okay, price retraced to our point of interest in order to take the trade, and then push to the upside. Now, we came very, very close all throughout these areas, and I'm sure we did have some individuals. Oops, sorry about that, guys. Let's go back to the M15. I'm sure we did have some individuals actually delete this order as they saw price continue to push to the upside here, okay? And if you were one of those individuals, no worries, okay? Feel free. Sign up for another private session this weekend. I will be giving you guys more trades to look forward to on Sunday, or next Sunday, I should say, that you can take advantage of. But one thing that I want to express is to trust the process, trust the analysis. You should not be doing things based on your own understanding, but you should be doing things based on what the market is actually doing. Our job is to be reactive in the market, not proactive. Our job is to react to what we see within the market. And along with that reaction, we'll be able to better understand what is actually going on within the market, because we're not trying to predict. We're simply just moving left to right, depending on if the market moves left to right, right? Simply just flowing like water. So as we can see, price taps us right into our trade right here. Now, this took place around 6:30 a.m. Eastern Standard Time. So this was right before, or a couple of hours before New York session had actually started. All right, but I still had this trade set, right? Now, I'm very, very comfortable with taking trades between London and the end of New York. So by the time London starts to the end of New York, I'm very, very comfortable with holding my trades, leaving my trades open, allowing them to run, right? But after New York session, more than likely I'm going to be out of the market. So as we can see, price hits our target around 9:30, okay, Eastern Standard Time. We simply just targeted this supply. Okay, that was based on the H1 time frame here. All right, and I was actually looking to take a possible sell opportunity from this supply. We can see that it did not hold. Therefore, that is telling us that H4 demand has overcome H1 supply, okay, as we can see. All right, and it gave us an overall return of about 6.24%. So we risked about 10.5 pips for around 65.5 pips. Not bad at all. And remember, guys, this was given freely to everyone who joined the private session. So what I'm going to do now is, in the description down below, okay, I'm going to post the link for this coming Saturday's private session. Now, for those of you who are interested, all right, click the link, go ahead and sign up for your session. I make sure that my students, I make sure that my one-on-one mentorship students don't take up those spots and don't take up those links and things like that. So anyone who's anyone can sign up for these sessions, tap in with me, ask me questions, pick my brain, okay? Gain more understanding and more clarity on how you should move forward with trading the markets, all right? It's your boy Trillionaire Mac. I'll catch you guys on the next video. If you guys have any questions, as always, feel free to contact me. I definitely have you covered. And peace out.